Hey, so I want to check back in on XLY. This is the Consumer Discretionary ETF. This ETF is the one that tracks Amazon and Tesla primarily. Those two companies make up 42% of this ETF. We do own shares of those companies, but to take a look at the entire segment, uh, we'll take a closer look. Not too much news, but there was an article I found that was interesting, and then we'll pivot into the technical analysis. So just to give this one a little more background, last time we checked, it was trading at 165. It's now at 171. So I'm expecting it to be relatively flat, even though we noted that it was in two uptrends, one dating back to 2009, and then one more recently from January of this year. So, yeah, let's just go over the news article I found first. Uh, where are we at here? So, this just kind of gave us a nice summary of what each sector was doing. So, we had consumer discretionary third. They were one of the best, definitely one of the more consistent ones in a very positive manner, going from 17% in those first 5 months, and then just in the past 2 months, going up another 14 to 15%. So that is very good for this company or for this ETF. We'll see how that continues. So overall, as we kind of mentioned earlier, one of the notes is it's been in this uptrend since January. This kind of confirms it. Uh, Something that I'd like to look at is how does Amazon and Tesla compare? Because basically, overall, this ETF has gone up about 31%. Only 42% of that increase is due to those two companies. Very interested to see have those two receive the same type of return, hopefully higher, but there's no guarantee of that. They're definitely a big driving force of it, but doesn't mean they led the charge. I would imagine they did, but something we want to take a look at. Uh, so I guess with that said, uh, maybe let's just pivot into sharing what makes up the majority of this. So on the left side, we have going back to roughly the last time we looked at this, June 12th, and then on the right we have today. What's their order? And so a couple big changes. The yellows, we're focusing on the 8th, so the right side. So the top 10 pretty much stayed intact since last time. The only addition was O'Reilly Automotive, which took the place of Chipotle. But again, I'm sure they're very close. It's just they happen to be a couple percentage points above, and that's how it ended up. But once you get into the top nine, that's kind of solidified. Because to jump from roughly less than 2% to 3 in a ETF portfolio like this, they really want to keep those in top positions. And at the top, so the top three, Amazon, they pulled. I have to imagine this was just a reallocation to bring it back to possibly home based levels. So we have Amazon here, got pulled back roughly 3%. Tesla actually went up 3%, so maybe just a swap there. Home Depot also got pulled back close to 4%. So I'm not sure. I don't think we follow Home Depot, but I have to imagine Home Depot just had a nice run, maybe over that past month, and so they had to reallocate. I imagine that's what happened. Um, but yeah, if you're more familiar with those individual companies and kind of what happened, by all means, let me know in the comments. But going back to the tracker, so we have XLY here, already kind of updated it a little bit, but let's pivot to the technical analysis. So there's definitely a lot of lines here, and I'll try to keep it simple to the most part. So at the beginning, we mentioned how there was this long-term uptrend in 2009. That's still in effect. So that one can kind of be broken down into multiple segments. So we have these purple lines, which go all the way back to 2009. They were kind of kept in this nice channel for a long stretch. Then it kind of uh, started trending upwards even higher from about 2016 up to about 2020. It had this nice kind of flow, similar to about 2009 up to 2016, roughly, end of 2016. And then all of a sudden in 2020, it took this really hard hit that kind of threw it way out of whack. Not that it hasn't been that low before, but it was just very unusual because this one likes to kind of trade within a tight range, you know, maybe like $20-$30 from the peak to the top, or from the peak to the bottom. And so when it dropped this hard, I think it just overcorrected, pulled back, overcorrected again, and I potentially where we are now, which is in this 2023 uptrend, which is still in effect, I think it's just trying to balance out. And so that's kind of the new addition here, because we left it at 165 as the current price, and we didn't like it. We thought that was bad for a couple reasons. We had 165, so that's right around here was the last time we looked. We saw 168, a little bit of resistance, and also the top of the range was 170, 171 roughly. So it was very close to that and very far from what we would have thought is a buy point at like 150, low 150s. Uh, and also we were just above the fair value range. So we didn't like the price. But now that some of the changes that I made since last time is, whoops, didn't mean to do that. Let me see. All I did was I actually expanded the purple lines. I believe I had them really tight to kind of monitor 2016 to about 28 or 2020. But that wasn't really fair to the later points. So I actually did like a dot analysis trying to find pretty much all the peaks that were like noticeable, and then also all the dips that I saw were noticeable. I just put a point on all those extreme highs and extreme lows. And so the purple was roughly 70 to 80% of all the peaks and valleys. And it's definitely kind of favored towards the bottom half. I will say that because the peaks were just so high relative to, you know, pulling out. But so that was one addition. I feel like that gives us a more comfortable range. I would like to narrow that in, but for now, that seems to be reasonable. If I were to pull it in, you know, that might change a lot in all honesty, but I like the number of having 70 to 80% of the data points in this. But yeah, if we start to get onto this trend again, where it kind of bounces around that middle blue line going through the center of the purples, then I will definitely start to narrow this in. Not by much, because even right now the range is about 148 to about 191, like $40. I would like to narrow it down into like $30 to $20, but for right now, like I said, to get the most data points, that's what I had to do. But now if it starts to bounce around that blue line, yeah, we will narrow it in a little bit. So I guess let's just update the tracker. So we're now at 171. I updated the buy points, which, yeah, there was just like a video issue. So I'll just tell you what the buy points are now. So I updated it to 145 and 165. 145 would be all the way down here at the very bottom of the purple uptrend. I don't really like that point as much, but I think it's definitely possible as this one continues to kind of figure out where it wants to go. So I did put that in there. But 165, which is that blue line, I feel like that is the range. So if we can get it at that blue line, which right now is about 165. Even if we go out roughly a month when we probably circle back, that's again like 160, 166, 165. So I like 165 as the buy point. If it got to that level or lower, yeah, I'd be interested in picking it up. We also have resistance at 181 and 187. So the 181, which is my point of interest right now, is this red line up top where it's not the all-time highs, but it struggled to get over that point multiple times. Couple in 2021 and then in 2022 on the way down. It wanted to go above and kind of did, but the overall trading, the majority of trading, kind of hit its head there. And so I think it's very likely that that'll happen again. Overall, the uptrend will continue. It's just how much longer will the 2023 uptrend continue? That's kind of the big question. I think it's going to start slowing down a little bit. I think it's going to start falling back into that blue uptrend range between maybe like 160 and 180, something like that, and it'll just kind of trade upwards very gradually, just like it did kind of before all this mess happened with like coronavirus, where it just kind of stayed within this nice $20 range roughly. I think it could get back to that, and we're kind of starting to see it level out. The highs aren't getting as high, the lows aren't going as low. But yeah, let me know your thoughts if you have a different opinion on this. But for now, that's how I'm seeing it. That long-term uptrend from 2009, that's still in effect. 2023, that is also still in effect. The buy points again, 165 and 145. So we're very close to that, especially since we updated our kind of check-in points. So yeah, I would give this fair value, considering I'm now giving a greater priority to the the blue line dividing the purple. I feel like that is my North Star in this situation. So if it's the closer it is to 165, the better for me to pick this one up. It being at 171, I think I'd be willing for it to wait a little bit, but considering what it's kind of returned already, 30% this year, it probably is not worth the wait, but overall that's kind of what I'm giving it. It's not too far of a reach if I were to pick it up, but I'll look into it. I want to see what Amazon versus Tesla versus this ETF, what is the difference in return so far this year. That pretty much wraps this up though. So just a quick recap, I'm giving it fair value. It's definitely near a buy point, so again, I wouldn't be opposed to picking it up. But the buy points that I have noted are 145 and 165. 165 is the point that I'm most interested right now, and resistance seems like 181. I think it'll struggle there for a little bit, and then 187 would be the top of that long-term uptrend range. So if it got that high, that's probably pushing the limits at this time. Down the road, that's probably fine, but right now that would be very high. So again, long-term uptrend since 2009, still there. Long-term uptrend short-term uptrend since January 2023, that is still also in effect. And then again, this one's driven by Amazon and Tesla. So we're going to look into what the returns on those two companies are to see how they compare, because those are the drivers of this. It definitely changed a little bit because I have 42%, and now it's okay, it's still at 42. Okay, so it really didn't change much, but their percentages fluctuated a little bit, but they still total 42%. So interesting. But yeah, that wraps this up. So if you have any questions, feel free to ask and I'll do my best to answer them. Or if you have any comments, feel free to let me know. Otherwise, please like, subscribe, and I'll see you on the next one. Bye.